October 1st, and as usual, there is a ton to discuss. Now, as you know, the Senate failed to reach a deal to extend funding, which has plunged the U.S. government into a shutdown. But what exactly does this mean, and who or what may be impacted? Well, the CBO is estimating that there could be as many as 750,000 employees furloughed. There may be private government contracts that aren't going to get paid. We've got the national parks and the museums that will more than likely close, and then a slew of economic data that is going to be in jeopardy. So we've got the BLS initial jobless claims report and the durable goods report, both set to be released tomorrow, and then the job report, which is supposed to be released on Friday. Now, the release of these reports, guys, is all going to be dependent on the length of this shutdown. This is now forcing us, though, to rely on alternative data sources for information, such as the ADP. And the ADP employment report did get released this morning, and it is showing that in September, 32,000 jobs were lost. This is a sharp miss from the expectations of a 50,000 job gain. So now 3 out of the last 4 months are showing negative jobs. All the while, several Fed members have been kind of saying that the labor market is solid. Now, come on. Now, what about my industry, the mortgage industry? Well, yeah, we are going to be affected, and so are our consumers. So if you've got VA, FHA, and USDA loans, for example, they can be affected because generally operations are reduced considerably. And this then impedes the response times and ultimately can lead to processing delays. Then you've got mortgages that require FEMA flood insurance. This could also be impacted as well. Any existing national flood insurance programs will remain in place and in effect until their expiration, but no new policies are going to be issued, which means lenders cannot close on any properties that require flood insurance. So until a new or a renewed policy is made available, that's just going to be on halt. The good thing, though, about rate, guys, is that we have a private insurance option that we can provide. Now, the Social Security Administration, in prior shutdowns, they did not process Social Security number verifications, and these are required for every mortgage loan application and is used to confirm the borrower's identity, therefore reducing the risk of fraud. If you guys have an application in place or a closing coming up or something like that, contact your lender and your loan officer and see if your closing or application is going to be affected. Now, the Mortgage Bankers Association did release their application data for last week, and this is showing that purchases were relatively flat, down about 1%, but they're still up 16% year over year. Rates did increase last week, and according to the MBA, well, they rose from about 6.34% to 6.46%. Refinances then fell 21%, but are still up 16% year over year. And even with this decrease, the volume was still the third highest since 2022. And thanks to some of the weak jobs data from the ADP, well, interest rates are starting to move lower again, so application data next week could show more strength. So this is it, guys, for today. As always, thanks for tuning in, and I will see you